Okay, drop your questions in the chat if you have any. Okay, GBP USD. I'm going to give a full breakdown on this, okay? So looking at the relatively higher time frame structure, okay? What we really had with this pair was a break of structure right here. And we actually caught this bottom right here. So Aiden was the one who sent this out. I'm not Aiden. He sent this trade out and it was floating about a 1 to 23 RR. So we got in at the bottom here. I can go into the chat and show you guys proof if you like, or I can do that after. But we got in down here and it actually ended up breaking structure right here. So if you look, this is the high that made this low, this high made this low, and then in this, so this is every time you make a new leg, okay, you create a trading range. Now your range, after you broke this low here, your trading range is from here to here, because this is the high that made the new low in the downtrend, right? And the downtrend that we had on GBP USD. So whatever happens within this range does not matter. I don't care what happens within here. I'm just going to be looking to sell it. So, and I say that because this was really ugly. It consolidated a lot, but then we got a new leg to the downside. And the last high, significant high that made this low was this one here. You could also have said that it was that one. It doesn't really matter. But what you shouldn't say is this one. This high did not create this extended push. This extended push was created within here, right? So if you were looking to sell this, which was completely reasonable, to be honest with you, because you made a new low, the only thing that happened was a really big sweep of liquidity right here. That's the only thing, in my opinion, that really pushed this past the structure. I know we had buys down here, like literally right down here. There's a 5-minute candle within this. It was huge and the imbalance was just massive. And that's why we got such a huge push from this level. But the only reason we had enough, I guess, fuel to break above this is because, or the reason was these, right? 12-hour time frame. So that means it's going to show up on the daily, pretty much perfectly equal lows. You know, retail people are going to buy here. I guarantee if I draw this over and go to like the 1 hour, there's probably a rejection. Yeah, look right here. So if you were to switch up the time frames, I bet you're going to find a pin bar that people were buying off of. Doesn't really matter which time frame it is. But you can see that right when it got to that level, it started rejecting. So retail traders were like, oh, buy it up. It's a massive support, it double bottom, whatever, all that BS. So what do? They run it and then push, right? This isn't just a little, trickle movement, right? This was a very impulsive boom, consolidate, and then go, consolidate, go, right? And I wasn't trading it at the time, but guys, this is so easy just looking at these. And I trade supply and demand. That's what I really like. So before I'm getting into the trades today, I'm literally going through what brought us to the price we were at. So like I said, we ran lows with this push down. We had some demand in here that we never mitigated, but you guys could have gotten so many entries. And I was doing this on Euro USD because like I said, I typically only trade Euro USD. I started trading GU because Euro USD was not moving at all last week. So on this, you had demand, right? And you can see here, push down, push up, and then we come back to test it. And now on the lower time frames, this is where like fractal understanding comes into play. On the lower time frames, this was liquidity. You can see those were all equal lows. And notice what happens. Run them out and then go, right? We run out the equal lows, mitigate the demand, and then we move up. Same thing here. Chop, run the lows right there, and then go. that I personally like trading supply and demand more than anything else because it's really simple to see. You can even see it here. These were lows, chop, 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 run the lows, and then go. It takes out, like, sponsor candles, yes, are a thing, obviously, but it's not always pretty. What is always pretty and easy to see, in my opinion, is supply and demand. You can see this. Supply and demand is literally this: chopping, chopping. In the case of demand, it's chop, 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 run the low, and then you want to see run the low, break a structure like here or here, and then come back to test it. And an easy rhyme is, sorry. So it's consolidate, manipulate, BOS, and go. So consolidate, manipulate, BOS, whether it's here or if you have a leg up here and it breaks this, doesn't really matter. So consolidate, manipulate, BOS, and go. That's what I like to see. That's literally what I look for. And it's also just, it's honestly how the markets move. The markets don't necessarily move by smart money concepts. Smart money concepts is just a way to classify all these things. It's like having Wyckoff. Wyckoff isn't like what actually moves the markets. Wyckoff is a way to label what moves the markets. It's not like Wyckoff was there first and then the markets moved based off Wyckoff. It's the markets move certain ways, and then Richard Emil Wyckoff, the guy who came up with it, he classified it in a way that is easy. He formed schemas, which is why they're called schematics, right? So yeah, see, now it's all starting to click. The shit people don't tell you. Schematics are schemas for the dynamics of the market that just show you, or classify liquidity and changes in order flow. Order flow isn't really the same as structure. Structure is higher time frame order flow. Regular order flow is lower time frame movements. So structure is this. Order flow is all of this, right? And it's all relative to the time frame. Like this. So this part that I just said was structure. That is valid structure, and all the stuff in between is order flow. But to this higher time frame leg, this is all of this is order flow. This is order flow. And honestly, I expected us to go short when we got up into here because we were in a downtrend, and I thought that the leg that we started forming wasn't going to just break through, but it was strong enough from that 5-minute candle that we had to actually end up going long, right? So anyway, I just wanted to clarify structure, order flow. So like this, structure, right? All of this, order flow, right? This is a break. This break here is a break in order flow, not necessarily structure, unless you're looking like this. This, I'll make this full screen. This is 1 hour structure. But to the higher time frames, 1 hour structure is just order flow. And really your BOS was down here, right there. You can see it tested it and then went up. So anyway, that's just something that I don't think I've really talked about. I'm actually talking about a ton of stuff, so I hope you guys are paying attention. We can see very clear on this order flow and structure. This is nice wave play, guys. It's super easy. Supply, demand. I'm literally going over everything. The way I like to trade, you get a leg, a push down, and then another leg. From a structural perspective, it's easiest to just look at structure as they define it. Like when you first started trading Forex, you probably heard structure as like the high that made the low or the low that made the high. Like this is an uptrend. And you're like, yeah, well, obviously, but you think that it can't be that simple, right? Like what about all this? What about when all this happens? And then it goes like that. And then like, that doesn't matter. Is this a new structural point? Or, you know, one of the things that would always trip me up was this. Here, failed to make a higher high, broke this, right? And then you're like, oh, I'm going to sell it. Guess what? Stop out, because this is the low that made the high. This low did not make a new high. It just had a tiny push up that is of no significance. Anything within this is really not that serious or significant. The low that made the high, look for buys anywhere within here. This is now a trading range. You want to be buying it down here, and you can sell it from up here. Personally, I don't like to be looking for sells. It's just counter trend, and it makes things tricky for no reason. But on the, see, I say that, but on the lower time frames, I have no problem doing this. It's just for me on the higher time frames, something about trading like the hourly like this, I just hate it. I don't know why, but I like 2 of my 1 minute trades today were basically like this, and I'll show you guys. So structural perspective, this is what I do. Structure, points of interest, lower time frame entry, and it is that simple, and it will always be that simple because it's based off of the supply and demand of the markets, not any of this other BS. You know, like smart money concepts. Not that smart money concepts is BS, but using it alone is not smart. If you don't use structure with it, you're not going to win. I promise. Because, and that brings us to another point. So look at your structure. Okay. Find your supply and demand. Supply and demand can literally be thought of as sell to buys, right? And that's why smart money concepts work, is it's just another way of classifying these things. So sell to buy, let's say you have a sell to buy here. So this sell to buy becomes a demand area. There are orders here that the banks need to come back to. They need to come back to where they injected the selling before the buying, because those positions are in drawdown. And more importantly, that area of price is where buyers and sellers agreed on the price. When you get an area like this demand, buyers and sellers agree here on what the price should be. And when there's a movement, what do we call that? That's called imbalance. Why do you guys think it's called imbalance? Because there's an imbalance. If they agree on price here and it shoots up out of this range where the 50% is, that's like the agreed upon price. When it shoots out of there, it's an imbalanced movement, and the markets have to be balanced. There needs to be equal buyers and sellers. That's why you get trends, and that's why you get corrections, right? So here, and this here is literally all this structure. Boom, boom, new high, right? Boom, boom, new high right here, right? So you get a new high, and then after you get that new high, what happens? You start going down, right? And granted, this isn't super pretty. It's just consolidation and then a push, not really a break of structure. But that, it doesn't matter. You guys see, boom, high, low, high. Now, where did the high originate from? Where did the high actually come from? You can think of it, some people call it like the origin of the break of structure. So the origin of the break of structure is the last area where banks were gathering orders to go long, right? The last place where they were accumulating or picking up more orders to take the market higher. That area is this here. accumulation doesn't have to look perfect. Like, preliminary support, selling climax, ST, STNB, spring, BOS. Like, it doesn't need to look like that every time. Accumulation is literally chopping around before expanding. And what do I call that? I call that supply, or I call that demand. Like expanding to the upside, this consolidation, that's demand, right? That's all I call it. I don't have to call it a Wyckoff accumulation schematic. That's not really that important. So you can look at this. This is a schematic. This is demand. So now we have our structure. I see where the origin of this. So this push up, people don't think of it like that or like this, but this is a break of structure, a break in the direction of trend. When people hear BOS, they typically only think of it like this, where the trend reverses, right? Hold on, guys. Okay. So when people hear BOS, they typically only think of BOS like this. They don't think of this as a BOS, but it is a BOS because it broke this structure here in the direction of trend, right? So we had our new high. We found our area of demand, which is the origin of the break of structure, which is the same thing as the Wyckoff accumulation that pushed us higher, right? You can think of it like that. So that's another perspective. So I know some people who trade, they look at swing points as accumulation and distribution. Right here, they would label this. They label this as accumulation. Price accumulated because it chopped around and then expanded to the upside. I just call it demand. It doesn't matter what you call it, but I'm trying to show you guys that regardless of what you're taught or what you learn, it's basically the same, except for retail. Retail's BS. It worked here, but it's BS. And honestly, it only worked because this was here. This is demand, right? Chop, 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 manipulate the lows, go, BOS, come down and test. Like, guys, this is crazy. When I figured this out, I was just blown away. So we're trending up, trending up, trending up. We broke structure here, right? Higher time frame structure. This is all of our order flow. So on the 4-hour time frame, our structure is like this. Structure, order flow, all of this stuff. That's all order flow, right? So we can see that, right? Now let's go to the lower time frames and see what's happening. So this is bringing us, this long drawn out conversation is bringing us to what happened today. By the way, let me know what you guys think. Like, drop it in the chat. Is this like interesting to you? Is this surprising? Am I giving out too much and should stop? I'm kidding. I'm going to keep going. But let me know what you guys think. So if we look, we're trading into this level here, right? This clearly ran this low, right? This singular wick low. It took it out and then went, right? We also had this liquidity right here. And I didn't expect price to trade below it. It actually wicked past it. But this morning, I'm looking at this and I'm like, we swept these lows and we're holding this structure. This is the last low that made the high. All of this literally does not matter. I'm going to look to buy it because we're still bullish. You guys can see the swing points here, low that made the high. And that's what I'm saying. When people confuse stuff, they're like, oh, what do I do? What is all this? How do I play it? You don't play it. You literally just look for buys. So we come down to here and we get a run on these lows. So this is what I'm looking at this morning. So we get a run on these lows here. We break this structure. Now this structure isn't crazy, right? The way you could look at this is like this. And then, you technically broke above, made a higher high, but then you broke the low, made this, and then you made that. So to go long, I would have wanted to close above this, but that's something that, again, you can anticipate. You can have an anticipation of price breaking above this because you're trading into a higher time frame level of interest here. But even if it doesn't, you literally just look for a BOS like this and say, okay, it broke structure here, so I should at least get a pullback up into this leg, up somewhere into this leg, right? Because this leg to the downside also has an origin. It has an origin somewhere up here. You can see this is really the last buying pressure before we sold off and broke this low, creating a new low. So if you get a BOS down here, you can say I should at least get a retracement into here, right? But higher time frame expectation comes into play and says that if I'm trading in this 30-minute level over here, I hit it within this move, I can expect price to actually go above this and then head higher, much higher, right? So, I mean, that's not what happened, but I still caught trades based off of what price did. Don't try to, and I mean, I'm still guilty of it. Don't try to make plays based off of what you want to see. Make plays based off of what's actually happening, because if you make plays off of what's actually happening, that's when you become more consistent in your trading. Like, don't marry a bias and just expect it to just hold. Like, that's awful. Don't do that. Go with what it's telling you. And this is a perfect example of this. So I see this. We trade into the 30-minute level over here, ran out this wick low, had a huge wick right here. And then we had these lows, swept out. And runs of liquidity, guys, don't need to be like immediate. Like, when you think of runs on lows, you have all these. You want to see, most people, smart money people who are new to it, want to see this and then like that. It doesn't have to really look like that. It can look more like a gradual taking. Like, that's a take of these lows, and then you'll do it again. Then you'll do it again. So these lows, this is still liquidity that was swept. This is liquidity that was swept, and it just kind of took a little bit, right? It's not like we swept it and just flew, which does happen, but it doesn't need to, that doesn't need to be the case. So anyway, now let's actually get to the trades. Here are the lows. We run them out, form this demand, break this structure. Now I'm like, okay, I want it to come down to here. It needs to come down to here, because either it's going to go long when it gets there, if it breaks structure, or it's just not. Like, it's just not going to get long, or not going to go long, sorry. So when you trade into here, look for a BOS, right? Look for price to actually show you that it wants to reverse and head in the opposite direction. Don't just bank on it hitting it and then reversing. Yeah, so this, okay, so Mariam asked a question about how about when price finally gets to a higher time frame PLI. So this is exactly that. So like, this is the structure on like the 5-minute, right? And the higher time frame is all relative. If you're trading the 1 minute like this, higher time frame could be 5 minutes. So you have a higher time frame area, right? You guys can see this all tying in now. Where's our structure? Is like this. And then we broke it here, right? We broke that structure. And then after we broke that structure and came down, where's the, what do I look for next? The origin. Guys, like, the retracements are almost always 80% or more. I don't care what anybody tells you. You typically see, at least intraday, their retracements are very deep. And it makes sense, because when you're trading intraday, like on the 1 minute, you're trading the candlestick to make up an entire day's worth of price action. So yeah, you're going to get deep retracements. So the origin of this run here, this leg that broke structure, the origin is here. This is the last selling volume before we bought up, right? Now I see that we break structure. We break structure here. And then what do? So we break it and then we start chopping around. We start chopping around. And now here's a little counter trend trading, right? Trend on the 5 minutes up because we broke this structure, right? So now I expect to buy it, or I want to be buying it, but counter trend, I can sell it down, right? So higher high, and this is really fine. This is like very fine structure. It's micro structure. Higher high, higher low, higher high, higher low, higher high, right? Now this higher high was produced by this low, and this low yeah, so okay, so Tim, this is like, this also will kind of answer that question. So don't get the time frames confused. Like time frames don't really matter. This could be the 4 hour. Let's say this is the 4 hour and we're trading, this might be like the 30-minute, right? Just relative. I mean, so what? 5 to 1, 5 minute to 1 minute is a 1 to 5. So if you're trading, the 4 hour, then it's 240 minutes. It's like trading the 48-minute time frame. So let's say this is like the 45-minute. So here's your higher time frame point of structure, or your higher time frame origin for the break of structure. And then we had a little BOS right here. So higher high, higher low, higher high, higher low, higher high. So this is the low that made the high. So until we break this, I'm bullish on this pair. And you can see that it did push up when it got to it, because this technically was the last point of return for this leg. So that's why we got to push up. Now we broke it. And what happened? So as soon as I see this break of structure, that confirmed that we were going to go short down into here, because we broke the counter trend, or we broke the trend, right? Meaning 5 minute, we're in an uptrend because we broke structure. 1 minute, we were in uptrend because we were maintaining higher highs and higher lows. We break this structure. And after we do that, I can expect a retracement. Now, where should I enter, right? You should enter where the actual last high was that made that new low. This was it, right? We got a ton of consolidation here. So chop, 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 chop. Where was the high, or the actual buy to sell that caused us to break this low? It was this. So enter on that, right? Here's the entry. My take profit was here because I expected price to trade into demand. You guys can see this happens all the time. Look, chop, 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 manipulate, BOS. This is demand, textbook demand, because we consolidate, manipulate, BOS, right? Comes down all the way down. And I mean, from up here, it comes all the way down to here. Why does it push up? Imbalance. So this is where imbalance ties into supply and demand. So here's the demand. Buyers and sellers agree on price here. This is called imbalance because that's where there is an imbalance or a disagreement or disagreements. I'm listening to music. Don't make fun of me. So buyers and sellers do not agree on price here, right? Within this, they agree down here, but within here, they don't. So they need to come back down. That's why I was convinced the price needed to come down. We see the BOS, right? And then after the BOS, where do we enter? We enter on the origin of the move that created the break. And then you target your higher time frame POIs, like how Tim asked. This could be the 4 hour, trading the 48-minute. We're trading counter trend, right? Higher time frame bullish because of the BOS, but we're trading it down. Now I wanted to enter again. Why did I want to enter it right here? You guys can see following structure. Just follow structure on EU and GU, guys. I promise it's not super hard. The hardest part is executing the trades and trusting your analysis. That's still something that everybody struggles with. I struggle with it. Sometimes I'll see a perfect trade and I don't take it. And I'm just like, why didn't you take it? You're an idiot. So you guys can see the structure, right? Boom, 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 right? So where do you enter? You could have entered in a couple places. I decided to enter right in here. I was going to enter here, but I was like, you know what? I really want to get the fill. So you could have entered here and it would have achieved a 1-to-1. Here, I think it barely reached a 1-to-1 right down here with this push. But of course, I mean, it happens. This is how you know it was a good level. You get one run on it and then it goes, right? It literally just sold off right after it did that. So sell off, but you guys can see this entry is still open, did not get stopped out. When you're trading intraday, it's best to really not move your stop loss because you will see that you get stopped out often, but took this and then started going down. So on this one, I made almost 5%. This one, I lost 1% on the trade in here. For some reason, I can't click it. On this one, I lost 1%. Let me check the chat. Yeah, so I'm going through entries where we got. Yeah, enter on the pullbacks because pullbacks will get you into either premiums or discounts. Premiums for selling, discounts for buying. Before that BOS, I think. So ask that question again, Tim, with the lower highs and lower lows. What was risk reward? So he asked, yeah, the RR for the first one was a 1 to like 4.67. How do you validate a structural move? So a structural move like a shift, you don't want to see it like, okay, I'll answer these two. It's kind of the same. So Bob asked, how do you validate a structural move? How many candlesticks? How do you refine your entries? So like if you have a higher time frame POI down here, right? And you start pushing down, you refine entries by looking for a BOS and then entering on this BOS, and you can typically put your stop here, not all the way down here, because once you break structure, this low should now not be broken, right? You shouldn't break this low if you broke structure to the upside, because now it's considered safe. You shouldn't trade past this if you broke structure, because the banks had to inject so much volume to get this move above here that it wouldn't make sense for them to push back down. So that's how I refine it. And then with a structural move like this BOS, you don't want to see it do this. This is literally how I validate it. If you see this, you don't want to see just like a little wick above, like literally like this. This isn't a BOS here, right? Here's your high, low. Here's the high that really drove this low, right? So this high drove the low, so this is structure. This isn't a BOS. Okay, yes, it closed above it. If you were to do the bodies, it closed above it. Look what it did. Wick up, wick down. That's not a BOS. You want to see it like a really nice, steady close above and then a pullback, just like a steady push. That's how I would describe it, honestly. How do you taking the trade at the top? Yeah, you can yeah, you're welcome, Bob. Yeah, you can take, like, if you wanted to, you could have taken a lot of these trades much higher. In fact, this is something else I do. There are a lot of other things that I kind of talk about to the members for all of you who are not in our VIP channel. Just little things. This is one that I really haven't told to anybody, to be honest, because it's like really good, but it's not like some hidden trading secret. But on the lower time frames, wicks are really good entry points because they have more compact price action within them. So meaning like here, you can see this really big wick that ran these highs. You could have put your entry at where the wick starts, because there's compact price action within here that was basically the cause for this run of liquidity. There's something within this wick. It wicked above and took this liquidity. So this could have been a 1 to 10. I didn't do it like that just because I didn't want to miss the entry. But like looking back, I literally looked at that before this and was like, yeah, I could have done that, but it doesn't really matter that much. And then we trade below this. So you get all the way down here and then you don't get a BOS. So what happens? You get all the way down to this, no BOS. It's just maintaining structure, right? There is no BOS. So we don't look for buys. What happens? You could have caught this too, honestly. This is hindsight. If you don't like hindsight, sorry, but hindsight is useful at times. So if you took a short position, and this is something that's a little risky, but I've done it before. So here is your demand. Here's a break below the demand. What caused the break below this demand? This is supply, right? You guys can see it. Chop, 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 chop. BOS, like you break this little level, but more importantly, you also broke below this. So could say that this was a BOS here too. So chop, 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 BOS. You guys can see we ran a little bit of liquidity within here. Could have placed a trade like this. I probably would have put it up there. I'm not going to sit here and lie to you guys and say that I would have put it right there. That's a little risky, but this is completely reasonable. You could have taken it to this low, or you could have taken it down here because this is a higher time frame low that literally just got wicked out pretty much right before market close. So could have taken this. If you were risky, you could have done that. But I saw this one later in the day right here. So super easy structural play. Boom, boom, boom. Here's the high that made this low. Where's the origin? The origin is up in here. Refine it a little bit. You guys can see this is supply. So supply, like I said, is just consolidative price action, manipulation, and then a BOS. So chop, 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 run the high, boom, break a structure happens really right here. So chop, 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 consolidate, manipulate, BOS, good to trade into it. You could have been super risky with it, and you could have done something like this here, here. That's like honestly completely reasonable. That's not making shit up. Target this low because this is the trend, and when you're trending, you expect in a downtrend, you expect a lower low to be made. So lower low, lower high, lower low. What do you expect? Lower high and then a lower low. So at least target this area here. And that was another trade I took. I didn't hit a 1 to 7 on this. It's only like 1 to 4. So for the day, it's like 7 or 8% with a 1% loss. If this hit, it would have been like a 12% day, but it is what it is. You just got to trust your analysis, even though this is kind of BS. It happens, and that's part of trading the smaller time frames. So where do you see how can we make sense? So I thought it was a BOS. So when they broke, yeah, like moving stop loss too quickly is something to avoid when you're doing lower time frames. Where UTP, so TP is just like that's hard. UTP at levels like areas of interest, just smart money concepts area of interest. I'm not going to keep this meeting going for too much longer. So that question, trade within structure, like I'll show you in a minute. So like taking TP, it depends. Like if you're like in an uptrend and you have this point of interest, for simplicity's sake, you enter right down here, right? You enter down here. you would want to TP at least here because of the reason I just said. If you're in an uptrend, you expect a higher high. So at least target the most recent one if you expect a new one, right? That makes sense. And if you're like trading counter trend, TP at a reasonable level, meaning you're going here and you sell off of a supply level. And by the way, I've talked about pretty much all demand today, but supply is literally the opposite. Just take your chart and flip it upside down. So supply, if you sell it here, TP within here, don't try to take it past this because the dominant trend is up. And this is the last low that made the high. So don't try to take it below it. Just take it into it and then expect it to head back up. I hope that makes sense. So now there's only like one more thing I want to talk about. So there's more that we cover within the VIP. We do occasionally hold Zooms. I'm actually going to be holding a lot more of them for the VIP people in here right now. I'm going to be holding a lot more. I have a lot more time. I wrapped a lot of stuff up for the summer, and I think that I'll have more availability. So we do cover a lot of stuff. I talk about stuff similar to this. There's a little bit more that I go over. This is pretty comprehensive, but it's not my complete method, and it's not literally everything. Not to mention that in the chats, we have members sending trade ideas and analysis, and then we kind of collaborate with them. I send in the Wyckoff chat, I send trades like all morning, pretty much. People who are in there can vouch for me. I sit and stare at the charts every morning, and that's just how I trade. Like this was this morning, and just kind of sit and stare and take these trades. Yes, exactly. Minor break of market structure until the higher time frame POI. Yeah, exactly. So kind of the last thing I want to talk about. So what's next for GU? I'll get into that. So if you're doing this, higher high, higher low, higher high, higher low, higher high. Now the time frame is irrelevant, but what you'll see is, let's say you had a POI right here, right? You had a POI right here, and you try to just buy it up, right? Because you're not waiting for a break of structure. What ends up happening is a lot of times, even though the time frame structure, like this is the lower time frame structure, it ends up respecting and not just reversing and mooning from like a level like this, because the origin, one, the origin's usually lower, and two, structure is structure, right? All these highs are safe to play off of. This high made this low, so you can expect this high to make a new low. You can expect a retracement for a lower low. So when you see these higher time frame POIs, don't just blindly place them and hope that they go long. That's typically not how it works. How it works is you come into these levels, and then you eventually get a break of structure that shows a change in sentiment in the market to actually take price in the direction that you expect price to go. Like in this uptrend, you make a higher high, so you expect a higher low to make a higher high, right? So this structure, though, it starts forming, right? And you need to like be aware of it, because I promise you it happens often where you'll just respect the supply and then head a little bit lower, take you out, and then go. Like it happens all the time, I promise. And the other thing is that once you break this, let's say I'll change the look of it. Damn it. I'll change the look of it a little. And I'm sure some of you guys have seen this. You guys will see like, boom. like this is all relative, so it doesn't have to look like this. But let's say you have supply here, right? So you have supply here because there's structure, boom, 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 boom. You broke it here, came down, retraced. You have supply. So you see something like this, like in this leg down, you're trying to be slick and play counter trend. And this is super clear imbalance or whatever. Yeah, last week's EU pre-NFP. So this right here looks super clean. You're like, it has to go short. It's going, nope, it's just going to go long, especially if you start seeing this. And that just brings me back to my point, like lower time frame structure, pay attention to it. And also, as soon as you break structure on a time frame, all of these like little highs and lows, in the case of a downtrend, like if you're like this and you break this, the supply here that's unmitigated, the supply here that's unmitigated, and the supply here that's unmitigated, once you break this, those are all invalid. This structure, this break of structure is relative to this time frame structure. So meaning like, here's your structure, you broke it, so now you can expect all of these little structural points, the relative structural points that are on the same time frame, you can expect them to all be invalidated. And that's when you get actual trending markets like this. Like here's a higher high, higher low, higher high, right? You break this, start trending down, but the moment you break this here, all of these become invalid because there's nothing stopping it, right? And that's also kind of the idea of just going with the structure. Like what you'll see is price will just do this and just keep going and make a new high because you're in a higher time frame uptrend for one. And so you're in a higher time frame uptrend for one. You now have broken structure, and when you break structure like this, it invalidates all these supply levels, right? And they no longer should hold because there's no reason for them to. It's against the structure on the relative time frame. It's hard to explain, but like this structure, when you break it, now this structure that quote unquote looks the same, meaning it's on the same time frame, like the smaller time frame, it's just going against it. So then you're trading against the trend. It's that simple. Don't go trying to sell at supply if you're now trending up. That doesn't make any sense. What ends up happening here is just reaccumulation to go long, reaccumulate, and then reaccumulate to go long. And then these points, these highs are all just liquidity because if you're trending down, you're not coming above them. But the moment you break structure, now you're bullish, right? And then these are all just highs that are literally sitting there to be taken. And that's why higher time frame, when you get a smaller time frame retracement and then a BOS, that's why impulsive legs happen faster, is because all of these points are liquidity, right? And when you get this leg to the upside, what you have is a push up that happens so fast that you don't get all these little retracements in here. So then the corrective moves take longer because there's no liquidity being cleared out when you're here. I mean, there is, but they form new liquidity in the form of these lows and then take them out, take them out, take them out, take them out. And that's why corrective moves take so much longer, is because impulsive moves are short for the reason I just said. It's cyclical. They're slower because impulsive moves don't have all these little lows. In the case of an uptrend, of course, they don't have all these little lows, right? They're just very small. So they go slow, create a low here, take it out, create a low here. That's liquidity, guys. Create a low here, take it out, create a low here, take it out. It's just like what I said, when you're trending down, the lower lows act as points of liquidity. So lower low, lower low, lower low, take it out, take it out, take it out, break structure. And then now all of these highs, right, that they created because they needed to make more liquidity here, all these are liquidity. So then it just shoots up. right? So then it happens again. It shoots up and it doesn't really have a lot of retracements. So when they come back down, they have to go slow and generate lows, generate a low, take it out, generate a low, take it out. And as they generate these lows to compensate for the lack of liquidity within this leg, they generate highs, right? And when they generate these highs, their liquidity happens again, super fast. Lack of liquidity within this. So they go slow, generate a low, take it out, low, take it out, low, take it out, low, take it out. And guess what they come into? They come into a higher time frame demand level, or the origin of this BOS. And then what happens? Go fast, right? That's exactly how it works. Yeah, it happens. It'll break structure and then it'll go down. That's part of trading the lower time frames. So this is the last thing I'm going to do. I'm not going to have time to go over EU or GU analysis, but do you take first react? I take the first one. Like once you get a BOS, it's usually safe to go, especially if you get like a really clear demand. And that's, you guys can see it here. So BOS, this is the BOS. Here's the quote unquote first reaction after the BOS. So break a structure. Here's supply because it was just a big buy to sell, origin of the move, whatever. Enter there and then take it down. So yeah, I usually go after the first, but that is all I have time for today. I'm like super thirsty and I just talked a lot. So, and I'm sure that this was a really long Zoom. I don't know how many people actually stayed on for the whole thing, but if you did, I appreciate it. And I hope you guys found it valuable. There's more within the community. We go into a little more depth, but this is just supposed to be like a good overview and to kind of get you guys interested in like actual trading. Honestly, a lot of smart money trading isn't actually smart money. It's just trying to use smart money concepts and playing off of them. And it's kind of turned into a retail thing where it doesn't actually work anymore because the banks know what people are doing. The banks know when people are blindly taking sponsor candles and imbalance fills, and they make them not hold just for the actual supply and demand, or the actual, the real driver of the market. They wait for those levels to be met. So trading like that, in my opinion, I mean, I'm not here to tell you guys how to trade, but it's been the clearest way for me and I kind of enjoy it the most. So I wanted to get you guys interested in it. If you guys have questions, message us on Telegram, but at the least, I hope you guys found this interesting, and I hope it kind of, yep, you are welcome. I hope you guys really found it eye-opening. I know I did. I was like blown away when I kind of figured all this stuff out and taught it to myself. But I mean, you guys can see it. I'm just going to point out one last thing. Look at what happens. Here's the leg, right? This isn't a BOS. This is like a deep test of this. What happens? As soon as the break of structure happens here, we make a lower high and then go. I mean, it happens all the time. Just go through your charts and look at it, guys. I promise you'll be blown away. Anyway, that's it for today. I hope you guys enjoyed it, and I guess we will speak to you all during our next Zoom if I decide to send one out, or on our next YouTube video. So bye, guys.